Good evening, this is Giuseppe Basile. I'm the analyst. You can find at the blog fibstalker.com. I also post regularly on Twitter using the fibstalker nickname. Good evening. Today is Sunday, July the 28th, 2013, and it's 20 to 10 Toronto time. This is my Fibstalker review on currencies, a brief video in which I review three majors: the pound versus the US dollar, the US dollar versus Japanese yen, and the Australian dollar versus the US dollar. So let's start from the pound. What you see on the screen is the weekly chart of the pound. We know that there are some long-term resistance areas in this chart that were identified. They are identified by tracing from lows, higher lows in 2008 2009, and we have this level of this area rather of resistance starting in 164.20, which acted as a resistance in 2009, 2010, and then again twice in 2011, and again in 2013 it acted as a resistance. However, we also have a support area, and the support area is traced from lows in 2009 to highs in 2009, and as we can see, this was broken in the 2010 twice, but eventually started acting as a support in 2011 and again twice in 2012. And recently we could make the case that this was broken. However, as we know, the pound tends to follow the euro, so I believe that if the euro is in that move into the 141 area, the pound could keep moving higher and maybe again test this 164 area of resistance. We'll see this in the coming days and weeks. What is important to notice is that there was an initial support area which can be traced in the same way that we have traced the support in the euro, so starting from July the 10 to highs, and we have a level of support and long edge in the 150 that actually worked quite well, and it brought price into the first target in 153 and is now approaching this second target. So there were some measured move within this move, and we can see them on the daily chart as well, and they're very similar to what we got in the euro. And what is important here is that we can actually model the sequence we had with this measure move here, and we still are in a sequence of measure move higher. I would anyway stick to the larger time frame, and it's possible that when we will get into this 154.50 area here, it's possible that we get some profit taking, and there are two scenarios. The first one is, and the most probable one, is that this pair trades down into this 152.40, 45, 50 level here, and then continues higher. The pound does not trade in extension, so but it's still possible that once we got into this 154 area, the price would just show a small retracement into this, shallower retracement into this 153.40. So we have to keep these two scenarios in mind. Moving to the US dollar versus Japanese yen, you will remember that I've mentioned near the end of June and the beginning of July that we had this sequence which started as an extension here, providing support to price into 97 area, which brought price into the 91.50 and then the 180 second level of support. At this point I was waiting, I was looking for a continuation in extension, but what happened is that price broke that sequence, and so we lost commitment on the daily chart from buyers. And what happened is that price went into this 101.30 area, which was the first target, and suddenly we saw this move lower. So this was a busted setup and indicated the start of a move lower. Eventually we got a bounce, very weak, from this 20-day moving average going higher, but price eventually continue lower, and last week I showed that the first target could have been this 97.70 area, and that's where we got. So at the moment we could see retracement. Actually price could just continue lower here, but if we get a retracement we need to keep in mind a couple of levels. First of all, the extensions of very shallow retracement into 98.30, and I think it's reasonable to consider as a stop loss the level above 91.71. I think if we get a retracement, price is not going to make it above that level. So generally I'm looking for a continuation lower, and if we see the weekly here, we know that this continuation lower will continue into the 93.94 level here, and this level would be tested for the second time. So we might see another bounce there, but generally in the coming weeks we should actually see maybe a bounce, as I said, and then a continuation lower. So I think the Japanese yen is reinforcing against the US dollar, which of course it's due to the fact that the dollar is weakening a lot. Moving to the Australian dollar versus the US dollar. As you know, I believe that this pair is in big trouble, and the reason for this, I'm going to show it once again, is because we had a sequence of a measure move here, and actually this was actually an extension, and we had price support in the long term at the 81 in 2010. Price then went into the first target at 1 at parity, and then second target 109.80 level here, and then we were expecting a continuation in extensions. This continuation never came, and price got support from the next measure move from lows to highs, as we can see here, and the first test was a little bit sloppy here. The test actually has actually broken this level here, the 0.9568, dipped into it, but then the next test was to the pip almost, but then something went wrong, and once I saw this 0.9210 be broken here, I thought that this market was, and I believe it still is, in a big trouble, and we are probably going to see a retest of this 0.85, like I said last week. So compared to last week, the outcome and the analysis of this pair didn't change. We could also show this this busted setup here, and as we can see, profit take came just at this 0.8980 level, which shows how powerful these levels are. So at the moment we are seeing this profit taking. Of course, longs are not getting into this market. There is no reason to get long this market. However, last week I showed, and recently at the end of this week I showed two levels. There is an important anchor here which has been used already twice. This is this level here, which is which is the high or the on printed on May the 14th here, and this is an important anchor, an important level from which we are going to trace Fibonacci to model our price. And the first level will be 097.60 here, with a target at 095.20, and this target was it. And the next level and target has been reached as well. And we had the second target in this the second setup, short setup, right at this 096.60 area, which was very nicely showed resistance here, and price went to the first target and was not able to make to the second target at 0.89. Now this week the market has been very weak, and I have a line in the sand for this market. This line in the sand is this 0.9110. If price moves below this level, then we will see a continuation lower. And at the moment, if we want to find a potential level of support, this could probably be the highs of the recent move here, and still this resistance 0.93, if it's a real resistance, will keep pushing price lower here next week as well. And below 0.91 we will continue lower, and we continue lower into that 0.85. So no reasons to be very bullish about this market. If we get a strong rebound, I see 0.9550 acting as a resistance. Hope this video helps in trading these pairs. I think there are good opportunities here, especially to get long again once these markets that are all going higher together with the euro will correct. If you want to receive this video, just subscribe my newsletter. It's free. You go to my blog fibstalker.com, and you can register. It takes only a few seconds, and I'm going to send this video weekly along with all the other updates. Have a great weekend. Bye bye.